Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with Trade the Chain and Market Rebellion, your favorite crypto analyst. My name is Nick Mancini, Director of Research at Trade the Chain, joined by CJ and Monty, both senior research analysts at Market Rebellion. And we are here to break down everything going on in crypto and a little bit of TradeFi and how that all is correlated or lack thereof recently. So we do typically start out with kind of macro and then, just start dripping into things. But Monty does have a very packed schedule today. So we are going to have him go first. He's prepared some material for all of you. So I'm going to go ahead and pull up his charts.
And a very nice shirt, by the way.
Thank you, sir. Thank you.
Monty
And
looking
thank you,
dapper
Nick.
today for all of his things he has going on. So
this is Versace, but yeah, not quite the Gap. But anyways, let's talk about Bitcoin because let's not beat around the bush. Let's be honest. It's dropping like a rock right now. And this is kind of the situation that we've all been waiting for, the situation we've all been fearing, where we get this breakdown below this critical level where we've seen significant supply absorption being 27.2. We consolidated there. We made a run up to 30K, came back, retested it. That was a lot of, that gave a lot of people confidence that this was a confirmed level of support. But one thing that is definitely worth noting is the monthly top tier spot volumes. I was joking that I said it was, Binance down 50% month over month, which is true. And it may as well just be Binance. You can see how dominant Binance is, being this royal blue here. You can see that, month over month, their spot volume has fell 50%. So that makes you wonder who is going to be stepping in at these levels? Who is going to be buying? And the answer is quite clearly from today's candle, nobody. And that in conjunction with a weak Eastern market, which is something that I've been talking a lot about on this show. The Kospi looks particularly vulnerable here as it approaches the level that we highlighted as critical level, also the 20 period moving average. If it breaks down below this level, I think that spells very bad news for the altcoins. But one man's bad news is another man's good news, because I think there's going to be a lot of shorting opportunities ahead. Bitcoin dominance. Now, one thing you'll notice is that I love the 20 period smooth moving average. It's a great tool for trending markets. And one thing that has been quite clear is we've seen a pullback in Bitcoin dominance in recent weeks here, as we kind of hit this 49% threshold. But I expect this to start to break to the upside. If we zoom out a bit, you can see that this is a critical level, sort of forming a textbook cup and handle plan here. And I expect Bitcoin dominance to rise in the coming weeks. That doesn't mean I expect Bitcoin's price to go up. Don't get it confused, because Bitcoin dominance rising just means that Bitcoin's falling less than the altcoins. And I think that that's going to be the scenario for the coming weeks. Sure, we may have some days of outperformance, but if you look at, the Bitcoin dominance chart, where we're at, bouncing from the 20 period moving average, putting in this doji-ish candle here, it looks primed, textbook, CMT cup and handle here. You got this big cup. And if we want to get, actually technical about it, what you do is you extrapolate the brim of the cup to the bottom of the cup. And that is the move to the upside. So we're looking at a potentially move up into the high 50% range for Bitcoin dominance. I don't think that's out of the realm of possibility. Now, as for a time horizon, it's not going to happen that quickly. It's going to be a slow bleed for a lot of these alts. And I know CJ has a couple that he's been targeting. I know, Nick, you also have been, very carefully watching these altcoins, because this is the opportunity we've been waiting for. Shorting these alts, shorting them with the BTC pair. I think the opportunity is very, very close. And this cup and handle formation, and you see exactly how high Bitcoin dominance could plausibly climb before we start to see any resilience from the altcoins. that really leads me to believe that Bitcoin is, despite the fact that Bitcoin's falling, the alts are going to fall even harder, and that's where the opportunity lies. So I'd love to get your guys' thoughts on, exactly what altcoins, you think are particularly weak or particularly vulnerable if Bitcoin does make a move down to that 25K level that I have highlighted there. Because I think that there will be blood in the streets in the altcoin market if we do get that sort of price action.
And thanks so much, Monty. I think that was a really good description, just to give perspective to what may happen to the market, provided we see lower price action in the near term. And just apologies to anyone if you hear some banging or some light thuds in the background. It seems like someone's doing some work on the apartment next door for me. So I will try and keep this quick. But my question to Monty is, we've seen a lot of wicking action down to that 26K, 26 and a half, 26.6, whatever number it is on the chart you're trading. And we are obviously approaching those levels now. So in my opinion, if we break those levels, I do think 25K is going to be pretty much, a magnet, and we'll reach it pretty quickly. But in your opinion, what are you still thinking that we might hold at that 26.6K level, or the fact that we just broke those, mid to late April lows, is that making you, more bearish than not?
For me, Nick, it's about the divergences that we're seeing across the board. Look at the volume divergence that we're seeing here, lower and lower bearish volume as we make new highs. That in conjunction with a 50% drop off in spot volume, I think that is what maintained these levels. So yeah, you're right. 26.5 is where we have seen supply absorption in the past. But given the fact that we're seeing such a significant drop off in spot volume, also you're seeing that reflected in the chart as well. It leads me to believe that we may not get the same sort of wick action that we had previously seen as we dip to these levels. So I am bracing for a move to 25K, because really, if you look at what happened, it was a sharp move to the upside. And I think we could plausibly see a sharp move to the downside as well. And if you're not, positioned accordingly, you could very plausibly miss this move over the weekend. So for me, I think we've already kind of breached those critical levels. And the fact that we're seeing that spot volume so low tells me that, no one's going to step in and save us here, especially with the Korean markets looking the way they are. We've relied a lot on the Eastern markets, but this to me looks very weak. And, quite frankly, as long as that's the case, I just don't see who is going to be buying Bitcoin at these levels, especially with weak equity markets as well.
And speaking of buying Bitcoin, if you want to go back to the BTC chart, maybe we bring CJ in, but I'll kind of throw it at you first, Monty. Is, let's say we hit that 25K number like we're discussing now. We have, kind of a magnet day or two where we just have some large red candles, similar to that mid-March or kind of early March trajectory where, I think everyone and their brother at that 20K level was calling for, the sky to fall. And it kind of did to a certain degree, but obviously we had a fantastic recovery with a 50% boost, on the heels of it over the next couple of weeks. So do you think that if we tag 25K, that we could potentially have another cycle from, 20 to 30? And if you are thinking that is plausible, what would you look for on the chart to kind of give some indication if we hit that level that you would start laddering into longs and or spot?
Good question. Yeah, so I think 25K is certainly a level to watch out for. Like you said, we had this parabolic price action, but don't forget that we also saw significant distribution when we hit 25K, right?
I think that was when the U.S. government sold actually that wick.
Yeah, I think so too.
Not even joking. I'm like, they released a report, I think in April, that said that was their sell.
So yeah, good for them. I mean, they sold after a nice move to the upside, but they did miss some more upside. Even the government shouldn't be kicking themselves over that, because I don't think that anyone should kick themselves over missed opportunities, because there's always more opportunities. But 25K does seem to be that level, Nick, that I'm watching closely. And what I would like to see is an increase in this volume, right? This report comes out monthly from CC Data, the monthly spot volume. I want to see, as we approach the 25K level, an uptick in spot volume. So this is the Bitstamp chart, ultimately irrelevant. Let's look at the Binance chart. But you're seeing the same thing, right? Where it's this massive negative divergence in volume while price falls hard. So it's like, what I want to see as we approach that 25K level is an increase in increase in bullish volume rather than this, kind of negative divergence that we're seeing. I want to see spot buyers stepping back in, taking that risk at this level and telling me that perhaps this is a level where we could find some consolidation and possible support. The fact of the matter is, though, I'm mostly worried about equity markets, not just our own, but the Eastern indices. If those correct, and it's been quite the year for them so far, I really do worry about a possible move down back to this 20K level in a scenario, again, Nick, like you mentioned, where everyone's like, oh, the sky is falling, Bitcoin's going to, uh, it's going to 4 digits. That's not going to be the case. People will try and short it and they'll get liquidated, and we'll see that big liquidation upwards like we have in the past. But that's a scenario that we need to brace ourselves for. But like I said, with this scenario comes some really good opportunities, particularly in shorting the altcoins. And that's where I have found the most success in recent days. And I think that's where the most success will be found in the coming days. So that's really all I got. If you guys don't mind, I'm going to go ahead and drop off, but we'll be watching to hear what you guys are shorting, because I am always looking for more opportunities. You know me.
Nice, and we appreciate it very much, Monty. And whenever you drop off, feel free to just wave and head out quietly. We don't don't need to make a whole big to do out of it, but we appreciate all that analysis. And I'd love to bring in CJ kind of on the heels of Monty, since you guys do work together, but approach trades a little bit differently. Oh, so that was the quiet exit right there. So let's go ahead and pull up another Bitcoin chart really quickly for you guys. But I wanted to bring CJ in just to kind of do a finality to what Monty was talking about, because CJ, you've been quite bearish yourself, and although not focusing very much on crypto, I'm sure lower prices will definitely get you interested. So I'm obviously a bit of a darker chart compared to Monty, but we have 26.6 at this chart right here, or at this point right here, and then we obviously have right around 25K down here. So just to have a chart up, and CJ, if you want me to pull your chart up, please do let me know. But as like we said before, we're approaching the lows from that mid to late March area, and then we're obviously staring at the highs from February and mid March as well. So what are your thoughts, and are you interested at 25? Are you interested here? And if we do drop to 25, are you interested there? And if the answer is no to both, give us a little bit of a reasoning why.
Yeah, I would say no to the first one in terms of buying this one support level, because if we do lose it, like the point that you guys were kind of harping on, it's like 25 is just such a magnet for price to fill in that inefficiency or whatever. The way that I've looked at this has just been from a purely technical perspective, and I've tried to kind of ignore equities and other markets ever since we made that lower high. We talked a lot about this on Monday. When we put that lower high in, that's like a very significant warning sign for the bulls, especially after Bitcoin was up like 80, 90%. So taking that into account, I think there was a pretty reasonable reason to be bullish or bearish, excuse me. And so now we're starting to see that drawdown, and even more so in the alts. So I'm not a buyer here. One of our viewers talked about shorting render last week. I took that position personally and haven't done a whole lot. Talked in our community about adding to it on that bounce yesterday during CPI. So like those short trades have been the trade over the past couple of weeks, and that doesn't necessarily mean they will continue to be. I do expect us to see some type of short squeeze if you want to pull up charts like Render or INJ. I think Render is probably a good place to start.
Well, let's save that stuff for a little bit later in the session because we still haven't covered macro and kind of explaining what happened. But I just wanted to kind of unpack this, considering Monty and I were on this. So my last question before we move into the macro and dig into some of the altcoins and some of your TradeFi trades is, you and Monty often say, shorting Bitcoin is sacrilegious and it's kind of, goes against your policy in the office. But I think now is the question of, are you interested in shorting Bitcoin if we break below 26.6? Just as a very tough question for your crew.
Well, let me do a little bit of backpedaling first and say that if I am ever bearish Bitcoin, I'll express that view by shorting a select altcoin or other types of altcoins just because they're higher beta and have, higher reflexivity to the downside when you see these downturns happen. So that's not to say I'm never bearish Bitcoin. There are many times where I am bearish Bitcoin, today being one of them. But the way that I would express that view in the marketplace is through selling altcoins, not selling Bitcoin. However, I do have some puts in BITO going out to June, the Bitcoin ProShares ETF strategy ETF. So that would be one equity play. But yeah, as far as like when you're trading on Binance or KuCoin or you're trading perpetuals, there's probably not a whole lot of advantages to trading like Bitcoin or just shorting Bitcoin straight up as opposed to like the alts. Only thing I would say is better is probably more liquidity in Bitcoin. So if you're trading with larger size, then that's obviously a factor. But yeah, I mean, that's basically how I'm positioned. I have some puts for June. If we go below 20, I'll cover that, and that'll be kind of a synthesis of the idea. But ever since we put that lower high in, it's just tough to be bullish, especially when you had like the tail end basket of risk, like the riskiest, like stuff like Pepe. It's like playing chicken, it's like eventually we all know how it ends for things like Sheeb and Pepe and other meme coins. So I think when you see that rally as well, that's just like, it's very concerning, or at least it was concerning.
Yeah, no, I agree with you. And I've been a little bit cautious on shorting Bitcoin and more so focusing on the alts. I'll be the first to admit I've been having some fun shorting Pepe because I think it's just, it's one of the easier ones to short. Well, I don't want to say easy because the volatility is crazy, but I think we all know what happens to meme coins in their first parabolic cycle. So, but we are going to talk about Render, INJ. I know CJ has a few trades, on the traditional side. I'm going to present a few things that I'm looking at as well. But one thing I wanted to cover, just to give a little bit of rhyme to the reason, and we're seeing very muted. I mean, NASDAQ has obviously been kind of inching higher, but S&P 500 has been very muted, even with some positive earnings. And I think the reason why we're seeing more of a downturn immediately in crypto, as opposed to equities really following us, is because crypto is the greater risk category. And when you're getting indication that you should go a little bit risk off, I believe in my heart of heart that crypto is going to be the first one that feels that impact, and that's obviously why I think the price action on the downside has been exacerbated. But CPI, or just inflation in general, for the previous month, or I guess I should say February or March going into April, seems to have flattened. And the indication is obviously CPI last month was 5%, was predicted to come in at 5%. It came in at 4.9%. Last month, a core CPI was 5.6, expected 5.5, came in at 5.5. So even though they're slightly dropping, still, in the grand scheme of things, 4.9 from 5, really not a big jump. At the end of the day. So inflation is flat, and people are still worried about Fed actions that are going to come in the future, potential rate hikes, keeping rates higher for longer, balance sheet contraction. So there's a lot of quantitative tightening topics that are still in the air and still can impact the risk side of things. And I think it is very much boiled down to inflation prints. And I think, if we had a great inflation print, Bitcoin probably would not be at 26K today. But, would it have stopped the bleeding? Obviously, that's a question for a different topic. So just to give a little bit of explanation, inflation is flat, obviously going to give some fear that the Fed is going to have to take more action. And anytime that fear happens, typically prices will sell off. So the other thing I wanted to cover, just because it related to what Monty was talking about, and maybe CJ, we can get your take on this, considering you have a knack for both sides of the coin, meaning traditional and crypto, is big market makers like Jane Street and Jump Crypto are retreating from the U.S. So the one side of this is nobody is really market making on US based exchanges anyway. I'm sure there's market makers on Coinbase. I don't know if it's Jump or Jane Street, but in terms of just leaving US exchange market making, I mean, most of the exchanges are not in the US, and these market makers kind of said that they are going to be focusing on the global market making services for international exchanges. So CJ, in my opinion, I don't think this impacts the market too much, because all of the plays are from the global perspective anyway, and there's nothing really happening from the United States on the exchange outlook or exchange front. So do you think that this is impactful? Do you think that this is going to cause more volatility, or do you think this is just kind of one of those headlines that we brush off and don't care about in a couple weeks?
No, I think this is actually very important. But long term, I don't expect this to be like Jane Street and Jump just quitting crypto and like they'll never be back. I think that what this is kind of alluding to or foreshadowing is the perp exchanges that are going to be launched internationally for Coinbase. I believe Gemini is moving into the perpetual futures exchange space as well. So if that's an international market that's exempt from the US, then the market makers, namely Jump and Jane Street, will just go to those international exchanges. But when you look at like the book on Binance US of like a month ago or 2 months ago when price was going up, and like now just a month ago, and how it's kind of been in this distributional pattern, basically the books are just paper thin now. And that leaves, at least in the US, and that leaves things to be generally just like very vulnerable. And when you don't have that extra layer of liquidity, things can sell off very violently. And I do think it's a big deal, but I don't think it's indicative that they'll be gone forever. I just think it's very similar to what Monty was showing at the beginning of the show, which is indicative of a massive drop off in volume over the last month or two, which should definitely not be ignored.
And I guess just as a final follow-up question, do you think we're going to see more crypto volatility, or do you think this is actually just going to make us crab more?
Well, it depends. It could, right? It could.
Because thinner books, easier to push the price around. So when I hear thin volatility, I'm thinking wide price swings. But also, if nobody's traded, nobody's interested, in volume's low, then the price can just stay flat for days on end. On the other hand,
yeah, I mean, you've kind of seen this in other bear markets where you just get, you can get a very slow bleed in the alts where Bitcoin just kind of consolidates and interest is very low. But yeah, I mean, less liquidity, thinner books, wider bid ask, all things that just aren't indicative of like a growing, healthy, expanding market, or an ideal market that you would want to be long in. So yeah, I don't think we have to spend too much more time on it. I just think it's not really bullish overall. It's a very good reflection of like major players leaving and then seeing that reflected in the volume basically halving over the past couple months, the past single month.
Yeah, I think it's going to be an experiment. We're going to have to live to find out. I think anybody can kind of really make a guess as to what this means, but we're just going to have to wait and see at the end of the day. So, well, digging back into the fun stuff and how this lack of volatility may impact the coins that we so love, I'll go ahead and just kind of start with ETH, since it is the daddy altcoin. And in my opinion, I think we are, more or less very similar to the idea of Bitcoin breaking supports and heading to the 25K level. I think we are pretty on the money for, if ETH does not hold, I think, what is this, 17 65. If we cannot hold that level, then we're probably just going to end up dripping back down to the 1700 level, maybe even possibly lower. So in my opinion, I'm not saying, jump into shorts, after we are already down, a couple points on the day, but I do think that if we end up, jumping back up to 1810 or even, 1800 flat and see a nice little rejection off of that, then you can probably start laddering into more shorts down to, the 1700 level. So I've been kind of scalping this back and forth. It definitely worries me when I see, a lot of times, and CJ would love to hear your opinion on this as well, but, crypto is the king of swing failure patterns at these levels. And anytime I start to see price crab back up to the low, usually I'll start cutting, in my opinion. So I closed some scalps on the morning, once I saw some buyback that looked a little bit stronger than normal, but my bias is still looking for short opportunities. Pepe is one that I've been shorting. Another one is Solana, has had some really good volatility. LDO took a really big hit last night to today. We've talked about Render and INJ. So CJ, would love to kind of understand what charts you're looking at, and maybe, what a few of your targets are.
Yeah, let me just pull up my charts. I'll share it.
And I guess I'll give a little Pepe update to everybody as well.
All right.
I drew these. So while CJ's getting that pulled up, so just a quick Pepe update, just because I've talked about it twice, so I'm sure everybody's like, just show the damn chart. So you can ignore pretty much everything up here because, this is where we really found our support. So the range, we got the range from, 137, 138 down to, 85. So in my opinion, very similarly, just to kind of use the Bitcoin chart as the most obvious example, we break through, we break through this level, you're pretty much going to head down to 25. So for Pepe, we've broken through the 139 level. We're obviously looking at the hourly chart, and this is a freaking meme coin, so take everything with a grain of salt. But if we close below, the 139 level, I think you're pretty, good to see, and it probably won't be a straight drop down, but I have a feeling that we'll probably end up tagging, this portion of the range relatively soon. And obviously, if we continue to break down lower, then we have a whole nother range to fill all the way down here, and you have, your bounce targets are obviously each at support. So that's kind of what I'm looking for Pepe. Nothing, you don't need to go too crazy with these. If it breaks support and everything's bearish, short it, and then, add your stop, above the resistance level, so that, you can take your money off the table if price ends up reversing on you. So I'll go ahead and I'll stop there, as I know CJ's patiently waiting, but what are you looking at right now, CJ?
Yeah, so difficult time to short here, just because we've dropped so quickly. I don't know how, or like if we will have some type of short squeeze back to like some of these critical levels, at which point I would love to fire another bullet into some short positions. But as of now, we talked about getting short last week in some of these things like Render and then namely INJ as well. And as of now,
INJ still looks pretty bad right now.
Yeah, I mean everything looks bad. Everything's always going to look.
I guess we'd be harder pressed to find something that looks good, right?
That's the thing, though. Everything always looks horrible at the lows, and everything always looks super bullish at the highs. So you kind of got to take it with a grain of salt. Overall, yeah, I mean, we could definitely keep going down. If I was flat right now, I would just wait. It's tough to, like, I've done things where, like, in the past, I've felt like I've missed a short move, or I've tried to do like trend following shorts, and I've shorted like right at support, which arguably we kind of are at right now. Previous resistance, potentially new support. And, price can rally 15, 20% sometimes. And, if you're levered like 3 to 5x on a short, you're going to get squeezed out of that. So that's the alternative situation if like you can't help yourself and are thinking about jumping in a short right now, is like, as bad as it looks right now, we could certainly squeeze off of one of these levels. So in our community, what I talked about on CPI day yesterday was like, we got the initial bounce, and I'm like, I'm going to save, 2 bullets. First one, I'm going to fire into a short position here, and then I'll save the next one if we go up. As you can see, the name of my alert there is top of range, fire second bullet. So we never got there, which is totally fine. But that's kind of how I'm, thinking about playing this. It's like if we have a lower high that gets formed, any retest of like the $2 range in render, I think is probably going to be an interesting short play if we even get there at all. But same thing with kind of INJ. I think like these are kind of the capitulation candles, or we're starting to see the capitulation candles. So if I was flat, I probably would do nothing. I would just wait for, maybe a retrace. Avoiding and sidestepping a decline is sometimes just as good as a win. So try not to have FOMO to the inverse perspective if you missed any of these shorts. There's always more opportunities. Crypto will likely go up in the future and there'll be opportunities to make money. But if I was flat right now, I would just sit and do nothing, and I would wait for a short squeeze of basically everybody selling here. If we get one more squeeze, then sell into it with, I'm going to sell into it with the rest of what I have. And, we'll call it a day. But as of now, it's tough to get into these on, a 1 day perspective. Maybe if you like, I don't really do much scalping these days, or I try not to really go anything higher than, the 1 day. But if you're a different type of trader and you like to look at like the 15-minute or, scalp the daily chart, then I'm sure there are potential short opportunities that, might be worth capturing or trying to capture. But overall, from a swing trading perspective, and, what I'm trying to do is capture a good portion of the whole move. I got to be patient with it. And, if we retest up, like I said 100 times, I'll short it again. But as of now, I just kind of got to let it drop and bleed. And like, I don't know where the market's going to go, but had a pretty good entry on this one. So
your crystal ball needs to get charged.
Yeah, I mean, at this point, I think you got to just try to, like, if you're in a good position or if you had a good short entry in any of the last week, it's the same thing we said kind of when we were longing on the way up. It's like, I think you kind of got to just try to do less and let the market, kind of carry the weight or do the work for you, so to speak. But that's basically all I have in terms of crypto. I only have open shorts in Render and INJ. That doesn't mean there isn't many other altcoins that are going to go down or could. Overall, I think the safest short, if I could put one short on for the next 3 months without looking at price for the next 3 months, I would just short some type of altcoin BTC pair that's overvalued, and you might have some spikes. I would do it with like 1x or maybe 2x leverage, but not a whole lot at all. And, they're probably going to fall 20% against BTC, 30% against BTC if this is the true end of the echo bubble and we go back to 25 or 20K. And to me, that seems like the safest, most straightforward play, because it could work in both a risk on and risk off environment. Any thoughts on that?
No, I agree with you. And I kind of wanted to give a little bit of more of a learning perspective here, because I think this is probably the easiest channel to draw for any altcoin or any like the easiest total range. So you have your deviation here, you have your deviation up here, because people always ask, why are your lines not up here? Why are your lines not down here? Well, we have more obvious touches, for these lines than we do anything down here. And clearly it was just deviation, above and below the range at certain points in time. So you have your high end, you have your low end, you have your mid range, and your mid range coincides with your previous low from back in April, which is where we're hovering at now. And just to kind of give a little bit of rhyme to the reason is, this, I think the 2nd of May was when someone brought this up on our stream, and it was just breaking below support. And obviously it reversed, and started to crab around support for a while, but then it finally broke this low, and then pretty much, was a laser down to where, support was drawn for both CJ and my perspective. So typically, you would expect some sort of bounce here. Whether it makes it up to the VWAP or, to this high is a whole nother question, but you would expect to see, some sort of hold at this level because of the confluence of previous trading times. So if we do break below this level, then I think, you definitely need to watch out for the possible of a swing failure pattern. But if we break and close below the level, I do think it's pretty likely that we'll see very similar price action to this down here, because, look what happened the last time it did it. So, touched the level, broke down, had a little bit of a bounce here, broke down further, retagged obviously this level, and then continued to break down. So in my opinion, this is, if you're new-ish to trading and you're building ranges and, support and resistance and trying to trade from that perspective on a higher time frame, this is probably the easiest learning asset that you could have, just based on, the structure of the trade. So do you agree, CJ, that this is typically where you would expect to see a reversal? And if we break and confirm lower, then we're probably just going to end up trickling further down like that. Is that what you would expect if majors continued to slide?
Yeah, I hope so. Right.
Yeah.
But I do like that from an educational perspective a lot, how you mapped out that range. And I think being able to map out ranges like that and understand deviations, and how you can use a deviation to create a defined risk when entering or exiting a position, that's really a very, very valuable piece of just like trading knowledge in terms of technical analysis.
Yeah,
I do have
deviations represent fantastic trading opportunities, because if you did trade the extremes and were taking the contrarian route, once you saw some support holding or, cracking back into the range, look at what price did every single time. It basically, that's date range, but it basically just took out each portion of the range after that trade would happen. So that's a 30-40% multi-day trade. And then I believe this is 20 to 30% as well. Yeah, 20% trade. So matching, knowing your range and knowing when deviation is likely can very much help you in your trading strategy. So anything else other than render and your outlook? I know you did mention INJ, but is there anything else that you have actively open or are actively watching for an opportunity?
Not in crypto per se. I think most of the alts are in a very similar place. I only have one trade I'd like to talk about in terms of, I guess, commodities or traditional markets. But I just want to share this very briefly because it's something that I've been watching a pattern play out for like months now. And I think that it would be a very good educational piece for some of our viewers or maybe folks newer to trading or like boom and bust. So would love to share my chart if you could bring that up.
Yeah, I need you to sync it
All
up.
right.
For me,
Okay.
pull it up. There we go.
I think we may have talked about this on the first show, but this is orange juice. And this is, some may refer to this as like a hyperwave or just a very strong parabolic move to the upside. And this week has been the first time that price has really broken that parabolic uptrend structure since 2020 when this move first began. So that's very significant to me. Now I have about 50 basis point risk shorting this particular asset. I want to kind of double up on the position if we get the opportunity. And I'll show you that opportunity in just a moment. But something that comes to mind when we see these, parabolic uptrends kind of end, something that comes to mind. There we go. This was DXY earlier in the year when we had a parabolic uptrend all throughout 2022, as well as then when we fell in 2023. So where we're at in orange juice is like we're just starting to pierce the beginning of that parabolic uptrend. And usually you give back a very large amount of the gains that we're seeing during that uptrend. So that's what I'm ultimately looking to capture here in FCOJ. And the thing that I like to match this with is something over 100 years old.
Are you still doing hand-drawn charts, CJ?
Luckily not,
So,
because we have computers and stuff. I've never, the older technicians who drew their charts in the 80s and stuff, like I remember Bollinger was saying, the young kids, they should get graph paper and draw the charts themselves as price moves intraday. It helps you be in touch with the charts. But as many charts as I watch, I think I'm too much in touch with them already. I see too many charts.
yeah, I've never drawn a chart or a paper chart in my life, but I do enjoy seeing some of the classical ones. Like Peter Brandt will share some of his like old charts from trades and stuff. So I think it's interesting. But I'll let you continue. Sorry about that.
Yeah, this is the Jesse Livermore speculative chart from like the 1920s or the early 1910s when he was trading, and the premise still holds so true today. And it's very important when you're shorting a parabolic uptrend and studying boom and bust to not begin shorting at the points of 8, 9, or even 10, because price can really just keep going up. It's essential that you wait for that lower high to be formed, like what we saw in the DXY and somewhat in Bitcoin, right? But this, is basically what I'm looking for in orange juice. I think that right now we're very similar to this particular point in OJ. And if we get a rebound back up to this level of resistance and start to see weakness from it, then that probably creates some type of deviation like this, and a point at which you can, put your stop loss above that previous lower high. And if you see resistance there, that's what I would look for, the additional short entry with defined risk. And if we go back and look at basically the structure of OJ, you're starting to see that as well. So we're kind of right at point 11, it seems to me. So I'm looking for point 12, that structure and that formation of a legitimate lower high. We might have already gotten it. I mean, you could kind of look at those two as
make
like
the
lower
argument.
highs. But I mean, anything that we get in terms of like a return to this moving average as the moving average is turned over, that's what I'll be looking to short pretty aggressively, because this has been a multi-year trend, and it looks like it's coming to an end, at least from a boom and bust perspective. And ultimately, after being in crypto for many years now, my goal and what has ultimately been the most profitable trades is by becoming, or at least trying to become, like an expert in boom and bust, riding that cycle on the way up and shorting it on the way down. So could be a potential inflection point there in a couple weeks, or maybe the top already is in.
I agree with you. I like looking at the parabolic charts from other assets, and we certainly track the DXY quite often in the TTC community because of its impact on risk markets, and obviously the dollar's up over the past couple of days, and we are seeing obviously risk assets continually be either muted or falling in terms of crypto. So we are going to get ready to close the show up very soon. A lot of great insights already, and of course the market is hot, so CJ and I have to get back to our battle stations. But if there are any people listening that would like a certain coin or stock or commodity to be checked out live, we do have time for potentially one or two of those. And historically, the ones presented by members on the show have resulted in, pretty good trades. Render being the recent one, that was a 20% trade down south since that was mentioned on the show. So we do appreciate our member call outs, and we do love to assist those that are watching with whatever they need. So we'll go ahead and allow 30 to 60 seconds for anyone to submit that if they would in the chat. And else, what I'm going to do is pull up what chart should we pull up, DJ? What's the interesting one? we covered Pepe, we covered Render. Let's see what
They all look the
most
same. They all look pretty
volatile.
similar.
Pepe is down
Other than
30% in the past 24 hours. INJ down 13%, OP down 12%, Didex 12% too, LDO 12%. So, a lot of the ones that I do typically track. Let's check out OP, since I have not looked at that one. Oh my gosh. How did we miss this, CJ? Holy shit.
I was watching OP. I just didn't trade
look
it.
Look at this. That's
yeah,
a hell of a chart.
once it broke.
Why didn't someone? So May 2nd was when someone called out Render. Why didn't they call out OP for us? That's a 30% drop.
Yeah.
What do we think? Where do we think this is landing? Probably $1.40, maybe.
Yeah, nice support level right there. In terms of targets, I'm just looking at like the beginning of where the move began for a lot of these assets. So it seems like a plausible place at what
You're thinking. Where we began. It depends on where your context. We could go down to.
No, like right where
January
you're.
1st.
Yeah. So on that day,
that would be another 40% drop from here. I will say this does look like a short that you want to just jump into. But I would be patient. Because at the end of the day, you're jumping in to try and squeeze, 4% when you could get squeezed 15% the other way, on a bad break. So
much higher likelihood.
That's one of the ugliest charts I've seen in recent times, other than Pepe.
Yeah, it was always kind of overvalued based on the fact that like it was a really hot new coin that was coming onto the market. Same kind of with Arbitrum. What's Arbitrum been doing lately, by the way?
Yeah, I was going to pull up Matic next. Let's pull up Arb, which obviously has less trading history, but so let's go to like the 4-hour.
But have you seen like the supply ratio or the supply schedule for like OP? It's pretty atrocious.
I'm pretty sure OP has. I'm pretty sure they all have unlocks soon.
Yeah, and OP has been just like, I think it's fully diluted value might be, or it was at one point 10x, like its total market cap, which is always kind of a red flag. And then like they just give the token away if you use the actual like platform or blockchain. Like if you bridge to Optimism from like ETH, they'll give you $1 in Optimism. And so there's just a lot of like the way that they tried to get users onto the Optimism platform is just like they incentivized it with a lot of token selling, or token rewards, I should say.
And those VCs are going to get their money too.
Yeah, and that's going to lead to atrocious looking charts. I think the best VC project, best example of a VC project that was illegitimate and basically just a Ponzi scheme, and the VCs got it at such a low price that even when it was down 70% from its highs, I'm talking about STEPA and GMT, of course, but I think VCs got that at like pennies. It went to what, like $3 to $5 somewhere between then, and then once it came back down to like 150, people were like, oh, this is so it's been sold so hard. It's like, well, there's still VCs who have it at like 5 cents who are up multiples and are going to sell even though price is down 60. Yeah,
even if you get it at 1 cent and it goes down to 5, who cares if you're still making money. So well, I guess you might not be able to get the yacht in San Tropez. Maybe you're only going to the club that night, but who's complaining, who's counting. So for ARB, just if we made it back to where it opened on KuCoin, which is around 11 cents, it's an 88% drop from here. Now, I'm not saying it will, but this is basically price discovery for an asset in the wrong direction. And although longing is infinite and shorting is finite. If we break through this low again, it's price discovery. So there is no area where I can say maybe you long, maybe you take it off. You wait. You're gonna have to wait for price structure to basically build ranges like this on the way down to then understand where your targets are. So if you are shorting ARB, be careful because of this price discovery perspective. But it's definitely still of the same type of asset that OP is, in terms of unlocks are going to come. The VCs that invested are going to want their multiples, et cetera, et cetera. So
it's just something to compare against ARB. If we could just look at Blur for like 30 seconds.
Yeah, Blur is a good one.
Because that's another very common looking chart, very typical of the like airdrop. So yeah, look what Blur did after its initial. This is this is the
I had a little magnet emoji up here from the first day. That's funny. But I mean, this chart is ugly. It's like the inverse ARB chart.
Yeah, and then you see like what it did after that first initial pump. Like within the first week, it was just a slow bleed into inverse price discovery for quite a while. So just something to take note of. Maybe it ends up being somewhat similar to ARB, perhaps not. But those are both airdrop fractals.
It opened at 23 cents. Is it going to go negative, do we think? But yeah, I mean, it's exactly the same type of action as OP. I mean, I guess it's a little bit simpler because you can actually draw this support line and say if we confirm under this support, then you've got price discovery down to 23 cents. But yeah, I do agree. It's looking likely that this level is broken and that we end up, careening down. So we got Bob requested CXW in the chat. Core Civic. And Monty, CJ, you're definitely more of the stock guy than I am, but this is quite the chart. It's had a wild ride since the 90s.
Did you say CWX?
CXW.
Oh, CXW. Okay.
So I had to pull out on the weekly just to get a better understanding of. Why does this keep doing this to me? I had to zoom out on the weekly to get a better understanding. So let's go ahead and see how this matches up. Yeah, so obvious resistance there.
This company manages private prisons and detention centers. So this is
oh, no wonder they went. No wonder they did so well in the 2000s. That's funny. I shouldn't laugh at that because I do not support the industrial prison complex. But it definitely makes sense as to why it had a boom in the 2000s. So,
Nick's fighting a war on the war on drugs.
I don't need to get into the whole political, but I do personally think that the percentage of people that we have in jail is asinine compared to.
I'll
just leave it at that because I do support the rule of law as well. So, but in my opinion, basically this was your deviation. So you survived in 2021. I personally don't know anything about the outlook for prisons, illegal immigrant issue. That's a great perspective, but I don't have any insights or fundamental research into this company's relation to border towns or border, holdings, because I would assume that different states have different services that they use. The different services specialize in maybe, general population or, high, very dangerous felons as opposed to the management of immigrants in those facilities. I would assume that there's different companies that manage different verticals. I could be wrong. So I would definitely double check that if that is part of your fundamentals, is exactly what types of prisons or facilities they specialize in. But just to kind of give the technical perspective, is it did have a nice little swing failure pattern down here. So if it can break above, in my opinion, this kind of 950 level, then you should start to slowly creep back up to the 1 week estimated 200 moving average, which by that time I would assume starts to coincide with the mid 11s, potentially higher. But that's how I would look at it. Is you got a little bit of a swing failure pattern down here. You survived. If you can get above 950, you have some decent trajectory up to the mid 11s from a technical perspective. So CJ, what do you think?
Yeah. It definitely could do that. I don't know. I just don't like buying stuff like this purely based on technicals because it's just like such a prolonged downtrend. If you were to look at like the 1 day chart, and I know nothing about the industrial complex. Like I'm not, I don't know. I think you have to know a little bit about prisons and the justice system. Like this just doesn't make sense to me. Like it would make sense to me if the stock was going up a lot, but it hasn't been. Like when you compare this, if you're looking at this as like a story stock where it's like, okay, yeah, more Americans or more citizens, wherever this company operates, there's going to be more incarcerations. Like, yeah, that's one thing, but price has not shown that to be the case yet. Sure, we've got 1 day of bullish price action at a support level, but this candle could end up being the exact same thing as what we tested the 20 smooth or the moving average that you have on there last month, and we could just keep going down. I don't know enough about this industry, and I don't think that just going off the technicals necessarily is the best decision, because it's very difficult to pick tops and bottoms without having some idea of the positioning within the market or the technicals or the fundamentals, excuse me. So yeah, I don't know. I not a trade I would take personally. I think there are a lot of easier setups. Didn't like Michael Berry buy something like this, or like some type of prison stock?
I don't know. I do remember him talking about that.
Yeah, I mean, when I look at like a stock like Ozempic, and you say like, okay, obesity and healthcare is going to be only more prevalent going forward in America. Therefore, the drugs that Ozempic make, or the drugs that things like Novo Nordisk make, namely Ozempic, being more and more prevalent, and you just see that stock price going up and up. Like that story makes sense to me, and it's being reflected in the prices. Whereas I don't know what the story is really for this particular company. And even if it was bullish, like it's not really being reflected in the prices just yet. I don't know. It's in a range, right? You're trying to trade a range, and if you want to risk 50 or 100 basis points on your setup, that this is like the setups that you follow, then that's totally cool. But this is not a trade that I would personally take. I think there are much better setups right now in the markets. Orange juice being a very simple one that we talked about. I think also like sugar, like these are things you can just wait for like a month or two, because like they're inevitably going to turn and probably give you a very good look. So yeah, I just wouldn't take this one personally. Nothing's really standing out to me other than just like you're trading a minor deviation from the bottom point of a range. Sorry to ramble on about that a lot, but yeah.
No, I mean, I think it's good. No worries, Bob. You did not derail us. We're talking about price action and technical analysis, so it's very, very much on target. This is just unfortunately a sector that neither CJ and I have too much knowledge of. So we're just purely looking at it from the technicals. And I do agree with CJ, in terms of the bullish bet, very risky. I don't like the price action over the past couple of days. So what I would do is, if it did actually break above that 950 level and hold, then I'd take another look at it. So maybe set alert. But for now, I would just, I would be patient with it. So. But we are at the top of the hour, another full hour session. So we appreciate everybody watching. CJ, please let us know how we can learn more about Market Rebellion.
Oh man, you put me up.
I honestly did. I didn't mean to.
Right there.
I know it was honestly a good transition, but the wrong button. So go ahead.
No, that's funny. Yeah, if you guys would like to join our community and follow trade insights and hear the things that Monty and I are talking about on a daily basis, we do a daily video at basically market open every day, and we publish our trades and kind of setups, as well as have education on technical analysis, fundamental analysis, and positioning and stuff like that. But I think that you guys would love it. We've got a very active community of traders in there who help us a lot. And if you'd like to learn more, you can try for just $1 at marketrebellion.com/try crypto. And definitely recommend checking out Nick's service over at Trade the Chain as well. I know they got a lot of great stuff and a nice community over there if you'd like to add anything to that.
Yeah, thanks so much, CJ. Definitely recommend it. That's where I drop all of our insights and our weekly emails. And of course, we also have some daily video content. So we very much enjoy our partnership and working together with Market Rebellion. There's a lot on both ends to glean from in terms of trading expertise, knowledge, and of course, opportunities in the market. So we are going to go ahead and get out of here. We do this show every Monday and Thursday. So we will not see you guys until the weekend is over. So have a fantastic weekend. Enjoy it. And just please remember, if you are even or flat, you are making more money than 99% of the market just by being patient. So sometimes patience pays off. Don't overextend yourself, and we will always be here to assist you. So good luck. Happy trading. See everybody on Monday.